Briefly, how the value is determined. We talked about arbitrage. There is generally a specific yield that a fund is looking for when investing in a life insurance policy. That is obviously based on a prospectus that is issued to investors. The age of the insured within the life settlement industry is very, very important. Generally, the sweet spot of the market are policies that insure individuals over the age of 70, although we have seen it work on individuals as young as 60 or 65. But generally, the market is a market that applies to insureds over the age of 70 and above. The amount of time the policy has to be enforced is generally 2 years and above. There are some states that require 4 years, and there are some states that require 5 years. The insurance industry, the life insurance industry, as many other industries, are regulated on a state-by-state basis. So depending on the type of policy and depending on the circumstances, the amount of time generally varies. But as a rule of thumb, it must be enforced for at least 2 years. The carrier rating is very important as well for an investor, and of course the type of policy. The fiduciary obligation that advisors have is very important when it comes to life settlements. An advisor who gives the advice to a client to let a policy go or to let it lapse, to surrender it, may be doing an injustice to a policy seller if they're unaware of the life settlement option. We've seen individuals who have come to us after a policy had lapsed or after an individual surrendered a policy, that were completely unaware of the life settlement market. And when we did do an evaluation, we did realize that they had left tremendous amounts of money on the table simply because the advisor and sometimes the client themselves were completely unaware of the market. So having a rudimentary understanding and being aware that this market exists is very, very important. Accountants, attorneys, wealth managers, really any kind of financial advisor that plays any role for a consumer should be knowledgeable within our industry. There are various states now, approximately 4 or 5 states, that require a life insurance carrier to give notice to a policy owner if an insurance policy is insuring an individual over the age of 60 or 65 in some scenarios of the life settlement option. So if somebody owns a policy and it's insuring someone over the age of 60 and the policy goes into grace, the carrier in certain states will be required to send a notice to the owner and make them aware of their life settlement option. An advisor needs to be aware of this option because they don't want to misguide a client and then possibly have the client get a notice from a life insurance carrier. So it's very, very important to be up to date in terms of the opportunities and in terms of the regulations that are in place, all in place for consumer protections. The fiduciary obligation, of course, is most important in knowing when it's applicable to a client. It is not applicable in every scenario. Many scenarios, the life settlement option will never come up, but again, it's a wonderful, wonderful tool, and advisors need to be knowledgeable not only about it, but really when it is applicable. Briefly, to talk about compliance, the life settlement industry is currently regulated in approximately 40 states. Recently, in the past few days, the 41st state passed regulation. The other states are entertaining legislation currently, but as you can see, most of the country is regulated, heavily regulated. The regulations really apply to everything involved in the transaction, including forms, contracts, licensure for both providers, the buying entity, and brokers, the entity that a policy owner or an advisor would retain to cover the market and leverage the value of a policy. The rescission period falls under compliance, and of course the industry for our firm and generally for most states is full transparency. There's commission disclosure as well as other disclosures that need to be put in place. So it is a very, very heavily regulated industry by the various state insurance and banking departments or that applicable or appropriate department within the specific state.